Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramanian.
Good afternoon. I'm Meera Dugal. Let's get to the headlines. Indian markets extend their winning streak to 3 days. Banking stocks lead gains. Broader markets outperform.
CPI inflation falls to 17-month low on easing food and fuel prices. ICICI Securities primary dealership says swap markets are pricing in a rate cut by August.
SEBI says is looking to tighten risk management norms for liquid and money market funds. This is owing to the volatility in inflows over the last few months.
UK Prime Minister Theresa May survives the vote of no confidence but faces an uphill struggle in the Brexit battle.
A couple of conversations coming up on the show today. The sharp fall in rural inflation. What is that telling us? Is it a sign of distress in the agrarian economy? SBI Soumyakanti Ghosh joins us on that. Tata Power and a call on higher tariffs as it tries to renegotiate purchasing power agreements. We'll get that voice in as well.
But first, as always, quick check on how the markets have been faring this Thursday. Neeraj is here with a closer look on some of those stocks and movers.
Fabulously well, Harsha. Doing really well for ourselves today as well. So third day on a trot. You could argue the day before yesterday was short covering and therefore just a small bump up, about 0.3%. But 2% up move yesterday, another 0.5% up move. But more importantly, the Nifty Bank, which is up another 1% in the session today. And frankly, today it's all about financials. I mean, without getting into whether it's a Nifty move or otherwise, just look at the list of names. Ujjivan, Indiabulls Housing Finance, Repco Home Finance, Equitas. That whole clutch of names has got some very strong showing to itself. The last couple of days, some of the smaller PSU banks too have been doing well. We've argued at how the delivery volumes were abysmal, 5, 6, 7%, so a lot of trading activity. But in today's session too, we're seeing a clutch of those names doing well. But a bit of a risk-on trade because you're also seeing names like Raymond and the high beta pocket, the Adani Group, etc., doing rather well for themselves. So fair bit of risk on, some bit of long build-up also happening across strikes on the index and on the Nifty Bank too. So while day before yesterday was short covering predominantly on the 26,500 and 6,000 levels, we're now seeing some bit of long build-up as well. Interesting to see how long does this last. But for now, good volumes and good price action and not enough losers. The top loser is UPL on the Nifty, which is down 2%. Aside of that, not seeing too much damage.
All right, Neer, thanks so much. In the bond markets, yields are trading at about 740 now. They were below that mark in early morning trade. You've had two positive triggers for bonds, lower inflation data with inflation coming in at 2.3% and a new governor who is being perceived to be dovish. Both of that has meant that markets are now pricing in rate cuts already. Ashika Suresh joins us with more on what she's picked up from traders. Ashika.
So bond traders are clearly cheering the appointment of the new RBI governor, who is widely seen to have a dovish bent on interest rates. And this has started to be priced in the swap markets, and they're expecting an interest rate cut, and they're betting on that. And there's also a turnaround in views for some of the treasuries who were earlier expecting that the RBI would hike rates over the next year, but they are also pricing in an interest rate cut.
Clear turnaround in sentiment as far as bond markets are concerned.
Absolutely. Let's get a deeper view into the inflation numbers. I'll just read through the inflation numbers and then we'll go across to Soumyakanti Ghosh. There was a good headline number, which is what is cheering the bond markets, because at 2.3%, you're at a 17-month low. You're also well within the comfort band of the RBI, in fact, very close to the lower end of that 4 ± 2 band. But, when you start to look through the breakup of the inflation data, you get some not so good news because the softening inflation is coming almost entirely on the back of food prices, which are continuing to fall quite rapidly. Rural inflation is down, suggesting that agrarian distress is a real problem. Soumyakanti Ghosh, Chief Economic Advisor of State Bank of India, joins us on the show to talk about this. Thanks so much, Mr. Ghosh, for joining us. I'm going to start with the inflation sort of disaggregated between rural and urban, because to me, that was the real story in yesterday's data, the way rural inflation is continuing to fall on account of those lower food prices.
Yes, actually, if you just do an analysis, state-wise rural food inflation for the last 4 years, so you will actually find that almost 13 states are now experienced negative food inflation, basically food disinflation in the current year from April to November 2019. And this food inflation has been consistently declined in the last 4 years. And this year, the scene has been very acute. Interestingly, in all the states which went to election, that was witnessing a negative food inflation. And in the month of November data, which was released yesterday, the data shows that the food inflation has actually disinflation has actually accelerated. So all in all, the problem with the food inflation is actually more acute, and the impact is felt now more in the rural areas.
Mr. Ghosh, can you sort of delve a little deeper to explain what are the factors that are going into this deflationary scenario?
See, I think the primary issue is that the procurement scheme ASHA, which was launched by September, I think that possibly may not have been aggressively pushed, because Niti Aayog had actually unveiled the scheme, and after that the scheme possibly may not have been aggressively pushed. So that is one of the reasons. And as you know, that procurement is limited only to 6% of the total crops. Most of the farmers in India are small and marginal, so they are not getting the benefit for these MSP increases. And also the fact that there are several other issues in terms of the slowdown in the demand, and the other fundamental difference which we actually look into agriculture data, which was released by CSO on last month, is that now you can see that within the agriculture, the food and the fruits and vegetable segment is actually witnessing a significant deceleration in growth. Last time the growth was around 0.5%. The growth is actually coming from the livestock segment, livestock and fishing segment. And the fact is that most of the small and marginal farmers in India has a livestock, but the problem is that they don't know how to sell the produce, say a milk of a cattle. So I think therein also lies the problem, that you don't have a market for agriculture. The agricultural sector is going through a structural transformation. Less of fruits and vegetables now, because nobody is finding it a profitable proposition, and even those rural and small and marginal farmers who are still stuck into it, because 85% of our farmers are rural and marginal, they are not finding a proper market to sell their produce. Until and unless we don't look into this problem of marketing of the agricultural produce, I think this problem is unlikely to go away in a hurry.
Mr. Ghosh, I think the structural transformation that is taking place is still sort of, not entirely understood. Perhaps it will only be understood in hindsight. But I want to talk about the consequences of it. I think you had pointed out that post-state elections, the result of the state elections, and this sort of, now very undeniable evidence of rural distress, you could see a move towards more farm loan waivers. Should we start to worry about that?
No, definitely. I think till now the total loan waiver is around 1.2 lakh crores, and I was looking at the states which are going to elections, and and all the states which are going to election list. For example, Andhra Pradesh is one of them, Odisha is one of them, Haryana towards the end of Haryana is another state. So the interesting fact is that all the states which are going to elections next year are witnessing food price deceleration. So if that is the criteria, and given that the other states which just went to election has also witnessed food deceleration, and if we take that as the criteria, I think additional 50,000 or 60,000 crores of loan waiver could be forthcoming by May 2019. So I think that's a very scary scenario if we are looking into.
With inflation consistently undershooting target, Mr. Ghosh, a section of the market is already pricing in a rate cut. What's your own assessment?
No, we are also factoring in a possible rate cut. The good thing is that inflation numbers as of now till July of 2019 looks significantly below the 4% target. After July, the inflation could start going up a little bit, but that will be more of a base effect, but still it will be much within the comfort level of RBI, around 4.5%. As of now, the numbers throughout 2019 calendar year looks benign. Only maybe one number or two number could be in excess of 4.5% or close to 5%. If that is the case, I think the central bank could now change the stance to neutral in February meeting, and possibly a rate cut could be on the table in April policy. But I will not be surprised if the rate cut comes earlier, because the December inflation number as of now, if I look into the mandi prices, the prices also looks to be significantly benign. So the central bank will have two inflation prints when it goes for the February policy.
Mr. Ghosh, the focus has been on food prices and on rural inflation, and rightly so. But what were the trends coming out on the other categories, core in particular, in the last number that came out yesterday?
See, core actually has now declined a good, I think, 46 basis points from last number, 5.73, and our projection shows that as the credit growth possibly could slow down because there is some sort of a global uncertainty building up. November month was not good for in terms of the demand, because there is already a lot of demand destruction. The oil demand for diesel, demand for kerosene, demand for LPG are all have declined in, actually has shown a negative growth in November. All the leading indicators also showing some sort of a deceleration. So if I take that factor into account, the Q3 and Q4 growth numbers could be on the lower side, maybe possibly sub 7%, and if the credit growth slows down, that could actually also impact the growth numbers. So my sense is that the core inflation will start mean reverting towards a lower number, and I will not be surprised if the core inflation also continues to fall in the way the food inflation has been falling, because at the end of the day, both should ideally converge if you look into empirical evidence.
I have only one final question, Mr. Ghosh, and this is on industrial production. The numbers both on the headline industrial production numbers, consumer durable and capital goods has shown a spike. Is that largely due to festive demand, or is that indication of a reversal in trend?
See, the numbers are actually hurting at 8% because the market expectation is a number around 5% or so. So from that point of view, it's a positive surprise. But my sense is that a part of this is because of the base effect, and if the growth considerations weigh on the market, and if the credit demand or if the other indicators show that the trend is declining, I think it will be difficult to sustain this 8% growth rate. So I think we can have a number in November which could be much lower than this 8% number which we have just witnessed in October.
We'll leave it there, Mr. Ghosh. Many thanks indeed for joining us with your perspective. That's Soumyakanti Ghosh from State Bank of India on industrial production numbers and on inflation.
All right, let's move on. The market regulator is looking to tighten the risk management framework for mutual funds, liquid and money market schemes. These funds have witnessed heightened volatility over the past few months, and SEBI is looking to limit that. Sajid Manga joining us with more details. Sajid.
That's right. We understand from from SEBI that they are looking at a risk management framework for liquid and money market schemes, especially because in the last couple of months we have seen higher volatility in terms of inflows and outflows, especially in September, October, November. They have seen that, and this comes on the back of the fact that the SEBI came out with a classification of debt and equity schemes, wherein they brought in additional category of overnight funds. Now the industry, which is the AUM, which is under liquid and money market, is roughly around 5 to 6 lakh crores. And and CEOs of fund houses say that nearly 12 to 20% of that is primarily because of the daily inflows and outflows for overnight funds. That's 50 to 60,000 crores comes in and goes out every day, and that creates a temporary or a daily risk, liquidity risk issue for the mutual funds, because the assets backing them are of longer duration, and these are short-term inflows and outflows which happen there. And so SEBI and AMFI are in talks to ensure that they can reduce this risk on the back of the crisis we saw in the last few months. One of the proposals which is there is to bring in 3-day and 7-day exit loads. Currently there are no exit loads for liquid funds, and so a lot of corporates do park them surplus money into these funds for overnight money market operations. By bringing in 3-day and 7-day, 3-day or 7-day, that decision is yet not taken yet, but as and when it's taken, it will bring down some bit of risk which is there, because then you don't have the short-term flows coming in and disrupting the funds or schemes for mutual funds. So this is something which will take a couple of more months before a final decision is taken. But yes, SEBI is cognizant of the fact that there is a risk which is coming in because of that huge amount of money, overnight flows of funds which is coming to the mutual fund.
Sajid, thank you so much for that. Let's move on. Road developers in 5 states find themselves in a fix. The Supreme Court has issued notices to Gujarat, Telangana, Tamil Nadu and Andhra Pradesh governments and Jharkhand as well for amending the Land Acquisition Act passed by Parliament. The petitioners have challenged the compensation mechanism adopted for the land acquired for these projects. This is in turn putting the projects in jeopardy. Nikki is standing by and she's drawn up a list of the projects that could be affected if the Apex Court eventually turns down these amendments. Nikki.
Thanks, Harsha. I'm going to start off with the basics first, where I'm going to tell you that Supreme Court has issued notice to the 5 states with regards to the amendments that these states have made towards the compensation and the transparency of the Land Acquisition Act 2013. And it's based on that the Supreme Court has sought a validity of the amendments made by these states. So let's look at the list of projects, 14 projects, which include a mix of both HAM as well as EPC, which have made it to the list, which yet have not received their appointed date. Let's look at Gujarat first, where 3 players or 3 projects are in the scope where they haven't received the appointed date. Sadbhav, Ashoka Buildcon, IRB Infra, to the tune of around 2,000, 1,600, 850 crore respectively for the 3 players. Second in the list, we have Andhra Pradesh, where there are 3 players again in that states, where we are receiving Dilip Buildcon, KNR Constructions, which have made it to the list. Now, Dilip Buildcon, 1 EPC projects operate here along with a HAM project in this particular area, and that is to the amount of around 2,500 crore and 1,730 crore. Tamil Nadu, that's the next state that we have in the list, where we have 5 projects which are yet waiting to receive their appointed date, which means that they're yet to receive any kind of land for acquisition to start the development of their projects. We have KNR Construction, which also includes 1 here, an EPC project, and IRB Infra. Apart from that, we're looking at Telangana, where we have Jharkhand, where we have two companies operating there with 2 HAM projects to the tune of around 860 crore and 900 crore. And last in the list, we have Telangana, where there is only 1 player which is awaiting appointed date of around for a project with a cost of around 936 crore. Effectively, if I'm supposed to pull that up, that are 14 companies, 14 projects which are waiting to the cost of around 16,300 odd crore, 16,900 crore, with the cost of around 16,900 crore. And the players include Sadbhav, Ashoka Buildcon, IRB Infra, Dilip Buildcon, and KNR Construction.
So what are these players saying, Nikki, and what are analysts saying about the impact?
Well, I spoke to KNR Construction as well as Ashoka Buildcon, and what they had to say typically about this is they said that the state in future may face a problem in acquiring further land, and that in turn may slower the process of NHAI awarding. However, at this point of time, they do not see any kind of execution risk happening from the award from the projects which have been already awarded by these states to these players. Apart from that, what analysts have to say pretty much concur with the same view. And also, addition suggests that the onus now lies on the state to defend the kind of amendments that the states have made towards the acquisition bill.
All right, Nikki, thanks so much for that. A steady shift towards premium products and an aggressive retail expansion is paying off for Bata India. The footwear stock has jumped almost 40% this year, outpacing all of its peers by a wide margin. Yash Upadhyay is standing by with a closer look at what's aiding Bata's rally. Yash.
Afternoon, Ira. So there are multiple reasons behind this. First, as you rightly mentioned, the push towards premiumization. So the company has been consistently focusing on premiumizing its product offerings with a focus on youth, women and kids. Some of its premium brands, they include the likes of Hush Puppies, Naturalizer, Marie Claire, and the Red concept that they have started recently. This in turn has had a positive effect when it comes down to their gross margins, which have remained largely stable above the 50% mark. Close to 50, 59 and 56% over the last several quarters. This despite of the fact that the proportion of premium products to its overall sales is just 30%, which the management hopes to scale up to 35% by the end of this ongoing financial year. Secondly, they have an aggressive expansion plan in the works. So in the first half of FY19 alone, they have managed an 11% growth in revenues. That is on account of the launch of their new Red concept stores, which has brought in higher footfalls. That apart, the company plans to set up about 150 stores in FY19. So 100 company-owned, company-operated and 50 franchisee stores, for which they have set aside an investment of about 100 crore rupees, which they plan to fund through internal accruals. And as you can see, they also have a focus on expanding their online presence. So a marginal amount of revenue comes from their 88 crores, which is less than 3.5% of their total revenues. But the management in their press release have expressed immense opportunities in the online space as well. So they are looking at expanding their presence there. That apart, they have a very strong balance sheet, zero debt, cash-rich company, almost 600 crores of cash on the books as of the latest data that is available. and also return ratios, they have been fairly positive. 18 to 20% is what they have been consistently doing over the last several years.
What could be the challenges then, Yash?
So firstly, Harsha, despite a pickup in discretionary demand, volumes have been largely flat in FY18, and that apart, the transition from mass or mass premium to premium segment is something of a bit of a concern that analysts have in mind, given that more than 50% of their revenues, they come from the sale of shoes or footwears worth less than 1,000 rupees. That apart, the stock is by no means cheap at all. It's trading at its FY19 PE multiple of 47 times, which is at a premium of 7% to its historical 5-year average. As a result of which, most analysts, they see a limited scope for upside. So the stock is currently trading well above the 12-month Bloomberg consensus target price. So the return potential indicates a negative 7% from these levels.
All right, Yash, thanks so much for that. Gujarat government has directed the state DISCOM to amend its power purchase agreement to allow power producers to pass on higher costs. But Tata Power's Praveer Sinha calls for higher tariffs, says even the revised agreement benefits DISCOMs more than power producers. Listen in.
Gujarat government has issued the government order, and they have also directed the DISCOM, that is GUVNL, to amend the PPA. And so also on that basis, other state governments are examining the proposal and will be issuing similar government orders and will ask their DISCOMs for the amendment. So we are very hopeful about it.
Yeah, well, I'm sure a set of stakeholders and not just shareholders are hopeful for this to pan out positively as well. Mr. Sinha, is there something like an ideal tariff hike that, I mean, maybe for your company or for the industry at large, that is needed for the plants to be able to break even?
I don't think there is a single solution for all plants, and one needs to look at it based on what are their individual challenges. In our case, it was admitted that this is one of the lowest cost of power, notwithstanding the fact that some revision will take place. Even then, it remains lowest. And we saw that in most of the states, more than 60% of the power that they would be procuring would be at a higher cost, even with the revised PPA that they will have. Over and above that, there are a number of other incentives that has been offered. One is that the plant availability will increase from 80% to 90%, and that means you get additional 10% power at just nearly variable cost. Similarly, the PPA term has been extended from 25 years to 35 years, and thereby again an opportunity is there by the DISCOMs to have a very, very long term of PPA. And also the cost of power will again remain virtually at the variable cost. So in all, this has been a very fair arrangement, and the benefits, if you do it on an NPV basis, to the DISCOMs is much higher than the benefits that has gone to the power producers. So I think one has to look at each of the proposals, whether it is the imported coal-based plants which have been resolved by government of Gujarat, or any other place, as to where it stacks in terms of merit order, where it stacks in terms of it being much more beneficial to the state DISCOMs and the consumers. And I think that is the principle on which the government have to take a decision.
That's Tata Power for you. British Prime Minister Theresa May survived the political battle of her life, defeating a vote of no confidence triggered by her own Conservative Party. She won by 200 to 117 in the secret ballot, but the size of the rebellion weakens her position when she tries to steer the UK out of the European Union. Here's how she responded after her victory.
Here is our renewed mission: delivering the Brexit that people voted for, bringing the country back together, and building a country that truly works for everyone.
Bloomberg's Neil Callanan now joins us from our studios in London. Neil, what are the potential challenges that May faces despite this victory, and how are markets taken in?
Good morning. First of all, she heads to Brussels this morning trying to get concessions around the Brexit deal from the European Union. They've already told her they're not willing to change the deal in any substantive way, but they will work with her on language. That's highly unlikely to placate the Brexiteers within her own party. So while last night she came through severely weakened, she had the promise that she wouldn't continue to lead the party into the next election. That was round one. She came through that. Today is round two. She's going to struggle there. And then after that, the DUP, which is the minority party that supports her government, has said it won't support the deal as it is. So it raises the prospect that the Labour Party may move a motion of no confidence in the government, and she will be under severe pressure then. So this was a minor victory in the scale of things, and she still has a long way to go before she can secure the Brexit she's looking for.
Neil Callan, many thanks indeed for joining us, reporting from London there.
All right, that's all the time we have on Powerline. Thanks so much for watching.
Thanks for watching.